Good afternoon, everybody. Well, here we are with the 6th Virtual South Summit. And this one is particularly special because it's about fintechs. Now, we knew that fintechs were creating a lot of disruption pre-COVID-19, but what's going on now in the COVID-19 area? So, we're going to begin. Maria.
Hello, buddies.
Isn't it great? I mean, here we are. I mean, many of you have been watching these South Summits, and you've seen that Maria has been up on the screen somewhere. Well, today, we thought it would be really special. So we're both here, keeping our social distance,
Yeah, of course. More than 2 meters. And this is a great experience because I can see all our friends and I can see them just in front of us. So it's a great experience. This is our last e-challenge from this first edition of Virtual South Summit. So I'm very happy because we've learned a lot. So I'm very happy to be here. And the first thing I want is to thank you, just the first one,
Please.
and to thank all our friends that many of them week by week from everywhere they come here because this is, I think we've learned a great thing that we always have said in these last years that we have not frontiers, no borders. But in these last months, there's no borders. It's just a reality because we are here all together from all around the world. So a great thing.
Yes, we have. We got people here all the way from Singapore, Mexico, you name it. So, Maria, let's talk about fintech. As I said, that fintechs were creating a lot of disruption even before COVID-19. What's your feeling in terms of the fintech ecosystem and what it's living through right now?
Well, I think it's living a lot because in all the industry, but above all this one is really incredible, all the transformation. That's why we have here so many friends just to talk about all this. No, I think they are going to tell us, and I want to listen to them that they are the ones that know about this.
Maria, earlier we were talking that millennials are going to be a very important factor going forward. And millennials in particular, now talking about fintechs, they invest differently, and especially women. And women with this whole transfer of wealth from baby boomers to millennials are going to have a lot of money in the future. How do you think this is going to change the way we deal with investments and the role of women in investing?
And the way they want to waste this money, no? And what they really...
Shopping.
Yeah,
Or
in
not
shopping and maybe in the quality of life is absolutely different too, no? But really the changes in the industry is really amusing.
Yeah, we're going to see a lot of changes. Okay, so let's move right along here. Nacho, welcome, Nacho.
Hello, guys. Nice to see both of you at the War Room.
Nacho, talk to us a little bit about the fintech evolution. What do you think?
Sure. I mean, well, fintech is one of the sectors that has been most impacted by innovation. So we have been seeing entrepreneurs working in the financial industry for more than 15 years. And after several years of maturity in the sector, perhaps the evolution has not been as predicted by some founders of the first years. I remember Paris, and you probably also remember with all the startups that we have at the IE Entrepreneurship and Innovation Center that many of the fintech founders started with this idea that they were going to kill the banks. And I think this evolution of fintech has been much better actually than that prediction because we've seen how fintech startups and big banks are actually coexisting together. And both sides are actually benefiting from mutual collaboration. So I think this is a very positive thing for the fintech sector. And I think that a clear example actually is today's event, where we have Carlos Torres, chairman of BBVA, and Adam Kostiel from NASDAQ, sharing the stage and sharing knowledge with 8 fintech startups at the same time. So I think that's a great evolution for the fintech landscape.
All right, thank you, Nacho. Maria, should we begin?
Yeah, of course, please.
All right, well, let's start with our first guest. Our first guest is Adam Koisel. He's Senior Vice President, Head of Listings at NASDAQ. Where are you, Adam? Okay. Adam, in addition to the NASDAQ Nordic exchanges, where there are more than 800 companies listed, Adam is also responsible for about 120 European companies that either are primarily listed or dual listed in the NASDAQ in the US. So let's begin. We're going to do this as a fireside chat. So Adam, let's start. The concept of investing in sustainable business models, or ESGs. How are markets sustaining these, Adam?
No está Adam, ¿no? Empieza con la competición y luego le damos entrada.
All right, it seems like we're having a little few technical difficulties there. We're going to begin with our competition. But before we begin with the competition, let's look at what this competition is all about and the categories and how the jury is going to be rating these startups. The jury is going to be rating these startups on 5 criteria. One is innovation. The other one is scalability,
Ahí está Adam.
viability, team, and investability, or investor readiness. But it looks like we've got Adam back. Adam, are you back? I think we're going to come back to Adam. So as we're about to begin the startup competition, let's give a big thanks to our jury. We have Angel's Nest, we have North Zone, we have China Accelerator, ID8 Space, Accel, Crowdcube, Dallas Capital, Scale Plus, Anti-Venture Builder, Kibo Ventures, Sia Ventures,
Tienes Adam, ¿eh?
Faraday, Golden Gate Ventures, SoftBank, Banco Sabadell, Google, BBVA, Telefonica, Deutsche Bank, Allfunds, Accenture, Bankia, MasterCard, Visa, PayPal, Citibanex, Banamex, and Mutua. So in a few minutes, we're going to start with the competition. But right now, I think we're ready to begin our keynote fireside chat with Adam Koistel. Adam, are you back? Mute, Adam. I think we got the mute there on.
There.
Excellent.
Hi there.
Okay, Adam, let's begin. So, Adam, we were talking about the concept of sustainable business models, or ECGs. How are markets sustaining these?
Well, I think just one maybe one step in the background is in terms of Nasdaq in the context of fintech. So there's two relationships that we have with fintechs. One is, of course, listing fintechs and financing fintechs. That's one aspect. The other is that we see ourselves as a fintech for many reasons. And if you see how exchanges are developing, we are more and more becoming a data play and a provider to the overall financial community. So if you look at Nasdaq, we are by ourselves provider to 120 marketplaces globally using our platform, our technology to run financial marketplaces. So exchanges, clearinghouses, etc. And then we ourselves are investing a lot in terms of acquiring other fintechs that potentially where we can become a stronger provider in terms of market data, refining data, etc., for the financial community itself. So we ourselves position ourselves as a fintech, and then of course the appetite for the marketplace to invest in fintech is something that we hopefully see through our exchange, through IPOs, but also of course through our Nasdaq Private Market, which is our marketplace for non-listed companies to manage liquidity. But that's just a background of us as a fintech play. With regards to ESG, what we've seen even stronger now with Corona or post-Corona, hopefully post, is that this paradigm shift that was taking place with sustainable investments and from the investment community to focus more and more on sustainability has been accelerated. And I think a key aspect of that is how fintech will be an enabler for many of these sustainable business models. Whether you look at it from a delivery of, how you typically went shopping for groceries, how you then now has moved into delivery or remote. I think for many markets that will be here to stay, or at least accelerated and entrenched in a much deeper way. And you see so many other business models that have been impacted by the fact that a lot of the business and a lot of habits have been moved online. And I think that's here to stay. And to facilitate that, you need payments. You need fintechs to enable that payment to interaction seamless and more efficient. So I think from a sustainability point of view, the whole fintech business in terms of providing data, in terms of providing payment, in terms of providing insurance, etc., all these aspects will facilitate a further entrenchment and a further commitment to sustainable investment models. And that's really what the markets are looking for, both the public, but also the private markets.
Okay, let's keep talking about what you're referring to here. Sounds like the digital shift going on, right? And the role of fintechs. I mean, even independent of sustainability, with this digital shift, what do you see the new role of fintechs being like?
Well, I see fintech as being the enabler, enabler in so many ways, whether it's from a financing point of view, if you look at Crowdcube, or if you look at it from a payments point of view, the whole fact, I was looking at just Adyen the other day announcing that they're helping the Reich Museum going fully digital in terms of how they will be managing payments to make sure that this whole physical interaction, etc., is minimized. But there is a whole shift. I think what we saw as trends is now more a reality, and for many businesses and for many sectors, payments is a key in facilitating that. But payments is only one component. That payments is what we've seen mainly on the exchange in terms of PayPal, Adyen, Square, and many others. But where you see fintech is, on the data side, you see so many, the whole, the neobanks, in terms of how we as consumers are prepared to commit to solutions in a much more dynamic way, in a much more committed way. And the whole society is kind of sort of accepting that what was a trend might be a reality for the future. And I think Corona has helped to speed that up. So I think from that perspective, I think we will see a bigger appetite in the investment community, whether private or public, to back these kind of initiatives.
Okay. And finally, Adam, we were talking earlier about the role of experiences in this new reality. Before coming into COVID-19, the user experience for many types of people, especially millennials, was even more important than the actual product or service many times. How do you see the role of fintechs in enabling experiences?
Well, I would argue that well, I mean, I'm part of the old generation in the sense that if I look at my kids and I look at the future, I mean, their commitment to the experience of fintech, I mean, they don't know what it means to go into a bank. So banks have to evolve. They have to partner with fintechs. I think that was touched upon earlier. And the fintech experience has to be provided in a credible and seamless way. But fintech, as I mentioned again, we're so focused so many times on the payment side, which is, of course, key. But there are so many other dimensions in the fintech space which enable. I mean, if you look at from the ESG point of view, if you are an investor and want to invest in sustainable business models, you need data. You need data. You need to access data in a very credible and seamless way. So that is one dimension. There are so many different angles of the fintech space, whether it's insurance, payments, technology. I think overall, the market is there right now to really commit to, from an investment point of view, but also from a user point of view. And I think those that are in that space and that shift will to get a commitment from not only from consumers, but also investors.
Okay, great. Adam, I think, this has been great, amazing insights. What piece of advice do you give our students and young people out there that are wanting to set up a fintech in the future?
Well, first of all, I'm not sure it's amazing insights, but second of all, I would say if you're looking at I would turn it around. I would say, if you are a business today, if you don't have a sustainable agenda, if you don't have a clear business plan that focuses on what you're doing from a beneficial point of view, I think it's difficult to recruit the young, both from a consumer point of view, but also from an employment point of view. And if you're a young person trying to start, or young or entrepreneur, whether young or old, starting a business today, I think you should think about, what is the value add here in terms of creating, enhancing the sustainability of whatever you're trying to evolve or revolutionize, and what the service you're providing. I think that's a key message that is not only doing to increase the value of your company, but to really create the sustainability of the business model that you're creating. So there's so many great ideas being launched now, and it's just a proof of the concept that as we're now shifting trends to reality, I think there will be so many more ideas popping up, whether it's within the payments, within data, within compliance, within RegTech. There's so many layers of the fintech aspect that are still there to be evolved. And the only challenge with fintech is that you need a regulatory and compliance aspect there, which puts an additional layer of burden. But stay persistent and make sure you have the right talent on board to help you bring you through that. And rather than to compete with all the existing players, maybe look at how to partner.
Okay, excellent. Maria, as we said earlier, fintech is such a big thing for us in South Summit, right?
Absolutely. And I remember, Adam, it's so great to see you virtually here. We are so happy having you. Last time we were at Plaza de Oriente. You remember at Café de Oriente with a caña. I think in a few months we will be together again.
I'd rather be there than on the screen, but this is
but we are very happy having you in the stream.
It's a very warm Spanish atmosphere, even on the website.
But having you here is absolutely great too. So thank you very much.
Thank you. And I encourage everyone to reach out and see where Nasdaq can be helpful, whether as an investor or a provider or as a partner.
Yeah, of course. We will be together. Thank you very much.
I'm sure many of our viewers will take you up on that. All right, moving right along. So we're going to start now with the competition. Our first startup is building white label products to enable banks, insurers, and financial service companies to serve their customers on the next level of personalization. From the country of Germany, we have Martin Damaski, CFO and co-founder, presenting Azure.
Hello, I'm Martin from Azure. We believe that the future in retail banking is about personalization, one interface for all my finances, and openness. If I'm asking retail customers about their banking, I get an inherent aversion on this topic. Many of them feel incompetent. And if I ask them how their relationship with banks is, they say, yeah, I don't feel treated well, I don't feel personalized, understood. And it even can become into the area of mistrust. And what's really worrying me is the younger the customer is, the bigger the problem is. But there is also a massive opportunity in it. It's about delivering financial solutions, not products, at the right point of time of the customer's life and in the right language that he really understands it. Customers want to have all their finances in one app and not spread across 10. And they don't care where the product is from, if it is from the provider of the interface or if it is from somebody else, a third party. They simply want to have the solution at this one space. The race is on. Who is delivering this best? And the race is on also, not only between banks, but also non-banks are entering into this market. Azure has developed a platform that connects to the transaction data in the core banking system. We analyze the data and we identify, we call it trigger events within the life of the customer. And then we offer solutions. It can be a solution from the bank or a third party. Let's make it more concrete on an example. Of course, there are 100 others out there, but let's imagine there is a customer who just got a child. Perhaps this customer now wants to start a saving plan to ensure that he can pay university in 20 years. Maybe he wants to enhance his health insurance plan. Maybe he wants to protect against his death risk. Maybe he wants to start, finally, ensuring that the world is worth living in 100 years also, and do some systematic CO2 compensation. So, using or going into this direction, delivering this innovation is good for everybody. It's good for the customer because he gets a better services, and his finances are easier to be managed better. It's good for the banks because they don't lose the customer, they provide a better service, they have a better customer relationship, and aside selling more products, they also earn more commissions on third-party products. Obviously, it's good for third parties because they sell more of their products on a variable cost base at the right point of time when the customer really needs their solution, their product. And it's good for non-banks because it also makes it easier for them to enhance their core business by banking features. Azure is a team of 10. We have developed the technology. Our main focus at the moment is on sales. We have first customers and our pipeline is well filled. Our solution is the cheapest and fastest approach to deliver the upcoming innovation. Thank you very much.
Okay, you heard it. Azure, time for Q&A. All right, what do we got here? Yes. Okay, Paula.
Hello, everyone. Thank you so much. So I guess my question is with regards to the business model and how have you tackled the question on, making sure that you're scalable and making sure you have an off-the-shelf product, which, you can encounter this type of trouble when you're focusing on a kind of a servicing approach. And also if you can tell us a bit more on, that pricing model, if it's I understand it's a SaaS, maybe with a success fee per use case. Thank you.
Unmute. You need to unmute. Unmute. No, we can't hear you. Unmute.
Hello, hello.
Yes, we can hear you now.
Is it still? Hello?
Yes.
Okay.
Do you have camera?
Sorry. Let me answer the second question first. So of course, we don't have to discuss where we make our revenue in the first year. It's about, let's take where is our revenue coming on in year 5. Most of it is commission for if you have the bank where the customer is. We don't want to have the customer to switch. So it is to bringing third-party products into this banking relationship. So our revenue, most of it is on commission based. But of course, the bank also sells their own products with our technology. So a part of it, the second part of it is license. Yeah. So the bank pays a license if they sell their own products. At the beginning, of course, there's also some setup fees that are relevant, but from the business model point of view, this is not important. So it's commissions and license fees. Then you had basically 2 questions: how to ensure that we have enough supply on our kind of platform marketplace, and how to scale it. From our point of view, this has 2 phases. At the beginning, for each of the relevant product sections, like insurance, like investment products, like special fintech products, and sustainability is an important one, we pick 1 or 2 providers, preferred providers. So at the beginning that we cover each of the section. Of course, in this phase, we will not have the broadest scope and always the best product on stack, but we have a solution. Then it's about, but this is a complexity we can handle, and it's a little bit about one-on-one integrations. Then we go to the banks, we increase the user base of the customer. And then of course the business model is kind of a marketplace. And then then it is basically the marketplace where the suppliers want to be. And then we can flip the situation and we say, if any additional insurance for health insurance wants to partner, to join, this is the API, this is the interface, and you have to adjust to this one interface. This is the only way how we can handle complexity on the supply side. And it's very similar of the customer and banking side or non-banking side who also use this platform.
Okay, thank you. We got time for one more question, people. One more. Any question from the jury? All right, moving right along. Okay.
Thank you very much.
Thank you.
Sorry,
Ainhoa. I'm sorry, Ainhoa?
yeah, I have one question. I have one question. Martin, thank you for the presentation. As you explained that you already have some customers, could you share with us use case that you already did, an example of figures or the use case that you did or something like that?
So at the moment it is that it's like always if you have a small company, and of course I had my experience in my 20 years of experience, that if you set something up newly, it's very difficult to sell it right at the first customer to a big bank, because this isn't a fit. Yeah. So what's happening at the moment, our customers are basically fintechs, other small entities, corporates who want to kind of go into banking. And there it is very basic stuff that they start. It is about, I want to have an interface where I can provide under my brand, so we are B2B to X company, under my brand, accounts, cards, and this kind of analysis and third-party services to a customer base that they want to tackle because they have the VC money for it, or a customer base they already have and want to get into banking. That's going on at the moment. But of course, we are in discussions already with banks where it takes its time, it's B2B sales, to basically work upwards in the size of the customers, I would say it that way. It's the natural path of development.
Okay, thank you. Oh, Javier Villamizar, question.
Thank you, Boris. My question is more about how you manage privacy and privacy concerns when you have a recommendation engine for financial products. How do you make the consumer feel good about that?
Yeah, so this has two dimensions. One is the legal one, and another one is, as you exactly say, it's a question of perception. Yeah. So, and then within the legal one, we have two things is what you are allowed to do and what you should do. Yeah. So basically what we can do is we can analyze the data. We don't need the customer name. It can be analyzed all on an anonymous basis. Because for knowing that this customer just got a child, I don't know that it is Martin Damaske. It is a customer with an identifier. And then then only the bank displays it to the customer. We don't even know it. And only if the customer says, I'm interested in a product, then it's about, and it's also clear for the customer, if he basically mandates a broker to introduce a new product to him, then the new provider needs his name, his address, additional information. And it's the question of convenience if he wants to key it in again, or if the bank delivers it. That is kind of the legal thing, how you manage it. And you could do it right at the beginning, but you do it best in the end. Then it's the second one. It's the question of perception. If you ask a 60-year-old person, probably he will say, no, the data shouldn't be used. So of course we will not start, or the bank will not start to tackle the older customers. But if you go to a millennial, he says, come on guys, I'm giving all my data to Apple or Google anyways. They know more than this. And I want to have the convenience. So why doesn't the bank do it? I want the bank to do it because I don't want to manage my stuff by myself. They should make me an offer. They are better than I am. They are more competent than I am. Please make me an offer based on my data. And if it is nice, then I say yes, and it should be convenient. So the other extreme is, of course, that they ask for it. So there's the area in the middle. So in the middle, it is to discuss with our customer, with our bank, somewhere, which customer to target in which way, and all this opt-in, opt-out scenarios that you do, and what kind of information you want to provide. And it's a long-term game. Today, there is a certain perception in the market. Look down the road 5 to 10 years. I think we all know in 10 years, this is standard.
Okay, thank you very much, Azur. All right, moving right along. Our next startup is making cryptocurrency-based financial products available for everyone. From Finland, Sampo Hirvainen, Chief Innovation Officer, is going to present CoinMotion.
Hello, my name is Sampo Hirvainen from Brussels, and I'm here to talk about the cryptocurrency market and our investment platform, CoinMotion. Now, the question many investors ask themselves today is how to diversify my investments. The central banks are pumping money to the markets like never before, and traditional investments overlap and correlate between each other highly. So this is where the cryptocurrencies and Bitcoin step in. They are totally new asset class, which offers non-correlation to any traditional markets and digital scarcity, which solves the digital double spending problem. They offer very high liquidity market. They work as a payment method, and their governance is decentralized so that no central party can dictate the terms that these assets work on. The cryptocurrency sector has grown a lot during the past years. Between now and 5 years ago, there has been over 5,400% increase in market capitalization and almost 100,000% increase in 24-hour reported volume. And the last figure is important because that is where we as brokers do our profit. So what about the regulation? It has been rough for the past years, but we've overcome these difficulties very well. And in fact, we are one of the first companies in the whole Europe to actually comply with the 5th anti-money laundering directive the EU has set. We are also the first company in the Nordics to acquire payment institution license as a cryptocurrency operator, and third company in the whole Europe to do so. We're scaling up with our client base. Our volume last financial year was over 220 million euros exchanged. Our platform and product is CoinMotion, which offers an easy, fast, and secure way for anyone to invest in cryptocurrencies. Our vision is to grow this service to be a fully featured banking service with personal bank accounts, enabling SEPA transactions, debit cards, and basically anything you may need in your daily retail banking services. Thank you.
Okay, well, you heard it. And now for some Q&A. All right, Ali, floor is yours.
Yes. Yes, thank you. Thanks for the presentation. I just would like to know who are your main competitors in Europe and in the States.
Okay, yeah. So basically, our type of business, which is brokering and offering like banking type of investment platform service, there are not currently many competitors in the Eurozone that do business like we do. There are global exchanges that do the cryptocurrency exchanging, but they are not really competing in our field because that's like exchange business, and ours is like brokering and banking and storage services. Coinbase is of course the most notable competitor globally.
Yeah. Exactly.
They target global markets and US as well, but we target only Europe, and we aim to build more stable and personalized services than Coinbase.
So you mainly focus on the European market, and if I'm using Coinbase, the only way that I would use you is because you're personalizing it for the European market instead, right?
Yes, better features, better customer service, and better UI.
All right, thank you.
Okay, thank you. Oscar.
Yeah, you mentioned that that you build an easier solution for people. So, what are the current obstacles that you think are not being solved by the current players in the market, and how do you overcome those obstacles?
Mute. I think you have the mute on.
Oh yeah. Okay. So there's multiple sides to that because, of course, our solution, the investment platform, is for the consumer markets, and the current, like the exchange spectrum, doesn't really offer an easy solutions. Like there are not many solutions that offer easy way to store, buy and store cryptocurrencies. Like the exchange services are mostly for the experienced traders, and the user interfaces are kind of complex for your average user. The other is the traditional institutions that may want to offer cryptocurrency trading in their own platforms, and for that our highly regulated business is very interesting choice, because not many, as I told in my presentation, not many companies have acquired any licenses from their national financial authorities, and those are even not available in many European countries, because Finland has been the first country to actually implement nationally the fifth anti-money laundering directive. So white labeling partnerships like that, where traditional institutions want to offer cryptocurrency trading, there are not many players like us who can offer that kind of legal security for it.
All right, thank you. Iris?
Yes, hi. My question was going back to the competition a little bit, because we see banks also, even banks trying to do these, other brokers that are already in the space, in a non-cryptocurrency space, expanding to this business. So it just wasn't clear to me what exactly you're doing different from the competition. You mentioned something about customer. Is it just about customer service that you mentioned earlier? Is it something else?
Yeah. So the main thing is like the regulative aspect, the certainty that it brings to our business in overall, because many of the competitors doesn't have any kind of legal backing to their business, and difficulties with for example, like banking partners such as we have had. We've been in a situation where we don't even have a Finnish banking partner because of lack of the regulation. And now that we've overcome these difficulties in the regulative perspective, and made our business like the backbone solid for financial authorities, it gives us possibility to build highly customized and partnershipable services. And like the traditional banks, I'm not sure if you're referring to like banks that are expanding their business into cryptocurrency trading. Yeah. So we don't see them as competitors. We see them as possible partners, as there have been speakers talking before about this exactly like white labeling partnerships, and not seeing these other companies as like competitors, but as possible partners who want to collaborate with us.
Okay, thank you. Final question from Esteban.
Yeah, if I'm not mistaken, at the end you talk about personal bank accounts. So the business model that you currently have is investments. What is your path into going to a more broad banking solution from your current business model? What is the path to going there?
It's more about just technical work at this point, really, because we have the payment institution license, which basically offers us the possibility to offer, for example, IBAN bank accounts and SEPA transactions and debit cards. So we have the licensing possibilities. The technical work is pretty much all that requires at this moment, because the platform currently offers cryptocurrency storage and euro storage for the customers, so that it's just about the technical work with the partner bank to enable like IBAN bank accounts and stuff like that. It's stuff that not many banks have done before with the operator like us, like cryptocurrency operator. So it requires quite heavy work on the technical side and the back-end side, but that's mostly about it.
All right, thank you. Moving right along. Okay, our next startup helps financial institutions understand better their customers' real financial and wealth needs. From Spain, David Conde is the CEO. Join me in welcoming CoinScrap.
Hi guys, good afternoon. Thanks, first of all, thanks to South Summit for inviting us to this e-challenge. My name is David Conde, one of the co-founders of CoinScrap, a platform that makes saving as easy as spending. We are helping banks and insurance companies to launch new products related to financial planning and behavioral economics in a faster and innovative way. Saving is not sexy. We say it's like going to the gym. Everyone would like to have the results, but it's difficult to make that commitment. People need a tool that works in the background while the life continues. And this is our solution. CoinScrap is a financial planning platform that helps you to save and invest for the future using behavioral economics and automated rules. The platform has different models. For example, our micro saving model, where you can set rules. As running up, you can run up your daily purchases and automatically transfer the change into different saving or investment products, or even you can save a percentage of your income or your salary. But also we have our categorization engine developed in collaboration with an investigation group from the Vigo University. Then using machine learning is able to detect income and expenses patterns and find out when is the best moment for you to save or invest for your future. We are selling this solution through 2 delivery options, integrated using our APIs or as a white label. We are working with some of the biggest clients in the financial sector here in Spain, such as Bankia, Mafre, Casa Seguro, Evobanco, or Aon. Using our solution, our partners were able to improve some of the most important KPIs for them. For example, they were able to reduce 50% of the customer acquisition channel. They were able to increase the saving ratios by more than 2Ks, increase the net promoter score by more than 30 points, or obtain a return of investment multiplied by 3. Thanks to our business model, we were able to win 3 important awards last year. For example, Top 20 Startup Award in Europe by Startup Lighthouse, 2019 Best Fintech Product by Product Hawker Awards, or the Most Innovative Spanish Startup Award by El Referente. But even our partners were able to win awards because of our collaboration. For example, Evobanco has won Premio Paraguas to the best product strategy because of a product launch in collaboration with us. So if you are interested in improving our society financial health, let's have a chat. Thank you for your attention.
Okay, time for Q&A. All right, we got our first one here. Diego, floor is yours.
Hi, congratulations. Can you talk a little bit about what's the business model and how you partner and charge your clients?
Yeah, sure. Yeah, thanks for your answer. Yeah, our business model, it's very simple. We are charging a setup fee for adapting the platform to the requirements of the client. And then we are charging a license fee that is depending on the number of active users that are actually using the the platform to save or using our features.
Thank you.
Okay. Paloma.
My question was the same as Diego about the business model.
No problem, Paloma. All right,
The
Ali.
same answer.
Thank you.
Yes. Hi, David. Thank you for your presentation. What is your scalability plan? What's the plan moving forward?
Yeah, I mean, it's an interesting question. The model is quite scalable because, I mean, the most difficult part of this business model is to close a deal with a bank. And once you are there, once you define the way of you are integrating with their systems, there are a lot of microservices that we have that they are interested in. We are offering features that we are providing features to the bank that in order to be able to compete with other neobanks. And once we have the integration with the bank, we can grow up our business with the same client. This is the first way to grow our business. And the second one is
targeting banks directly, right?
Yeah.
Okay.
Banks and insurance company. We are offering, I mean, the business models of both companies are overlapping. So we are offering the solution for both.
Okay, thanks. I don't want to take time from the rest. Thank you. Good luck.
All right, thank you. Elena Martinez.
Yeah, thank you. Thank you very much.
Hi, David. It's nice to meet you here. Very quick question is related to the previous one that someone just asked. It's around scalability, but also geographical expansion. So what are your plans there?
Yeah, we are starting by, obviously we are starting by Spain. We have like a few good clients here, but now we are having a look to Latin America. We think that is the natural expansion for a Spanish startup, and fintech there are growing quite faster. So yeah, and even we can scale to there using one of our clients here in Spain. So I think if it's not 2020, I think 2021 is going to be the year that we are going to scale to Latin America.
All right, thank you very much. Moving right along. Our fourth startup restores trust in the $7.5 million credit default swaps market. From Bulgaria, Dimitar Kiosev is project coordinator. The company is Derivium.
Hello, my name is Dimitar, and I'm going to tell you why Derivium is such a big deal. It is an innovation that ensures debt repayment and reduces investment risk. It creates profit for all stakeholders despite the economic situation, and of course it supports economic growth and boosts financial stability. So the COVID effect created quite a turmoil in the debt market, which would have been okay if we were before 2008, when there were a credit default swap used very rapidly as an instrument to transfer loan repayment risk, or at least part of it, from the bondholder to a financial institution. However, currently the global regulatory change shuttered credit default swap use, which created a kind of a unwanted situation that in 2020, to deal with the pandemic effect, we do not have actually an effective tool for risk sharing between bondholders, which obviously creates a deficiency in the market and hugely reduces the covered risk. Together with the Central Bank of Lithuania, we are creating a new collateral class to deal with the said issue. It is a commodity, and it's the only class suitable for CDS collateral. It is executing automatically on immutable records. It has a very substantial market size, with the euro-denominated market is 12 trillion, while the US-denominated market, mainly in the developing countries, is 8.5 trillion. We are trying to influence a very tiny amount of, very tiny percentage on both markets. We want to first focus on Europe by mobilizing 50 billion in private investment to support the European economic recovery. We are doing it by deploying a special liquidity instrument on the European market. Obviously, there is going to be benefits for all users, and here you can see a very clear example of that. Our pathway forward is very well determined and very well spelled out. Of course, we are mindful about the global markets as well. So as soon as we finish the Review Europe part of the project, we are launching on a global scale where the profits are much, much larger. We are going to create a two-tier support instrument for that market. And at the end, I want to say that the Review is restoring trust in debt risk sharing by adding crypto smart contract as new collateral class to secure credit execution on liquid and stable market. Well, thank you for your attention.
What do we got? All right.
Very few questions.
Yeah.
Paula, floor is yours.
Yeah, thank you. It was very interesting. I guess we went really quickly through it, and that's the reason why there are a few questions missing. But I guess my question is related to, in terms of business model, you have the risk of becoming maybe a consortium. I don't know if this is within your business plans or your plan is to stay as independent as possible. Although I see that you've developed it together with the Bank of Lithuania. What do you expect there?
Pretty much the Bank of Lithuania is the regulator, obviously, and they want to make certain that we are not breaking any rules and that it's safe to play with the Review. That's why we have upper limits of exposures. Pretty much our plan, of course, is to become a part of a larger consortium. Probably we will be acquired in a few years' time.
Okay.
Understood.
Inoa, did you have a question? Mute.
Hello. Yes, I have a question because I'm really sorry, but I am not an expert in capital markets. And I didn't get the point in this thing of the collateral and where was the collateral. Sorry.
Okay, no problem. I mean, it's very kind of new. So, yes, very, very quickly. Currently, there is a major problem on capital markets, namely that if you lend money, large sums of money, let's say 100 million, you have no certainty that you're going to see your money back. And this is a problem. So you would look for collateral. There are currently 3 classes of collateral: currencies, commodities, or securities. None of them is actually going to provide you the certainty that you're going to be paid. What we are putting together is a new collateral class, the first one in 500 years or so, where you, because if it's blockchain based, you actually can see the collateral moving from the account of the insurer to your own account on its own volition, not after it has been directed to do so by an insurer. So this is kind of something really radically new. And this is what the collateralization in general is.
So the disruption is in the process of knowing where is this collateral, not about the asset of the collateral. The collateral remains the same. It's the process of that.
Well, it is the process of that. However, it is inseparable with the nature of the collateral, because you have different collateral classes and different processes, because they have different physical quantities and physical manifestations. So you cannot really separate water from
Okay.
being wet.
Thank you.
That's what I'm trying to say.
Okay, I think we have a last
You're quite
question
welcome.
here. Paloma?
Can you hear me? Okay.
Yep, we can hear you fine.
Thank you for your presentation. As you mentioned before, after the financial crisis, the collateral products are not a friendly product for the clients due to the high risk and exposure to the bankruptcy. Do you encounter any problems or trouble ethically, or do you aware of this kind of problems?
No, not at all. That's the point of doing it in a regulated manner. What we offer is clarity on the exposure. So we are having a fully collateralized exposure. So there is no way the financial institution can go bust and bring anyone else with it. There is a very clear pathway for the regulators to limit exposure and to freeze out players that are too risky. So on the ethical part, I'm very happy to say we are really ethical. We're trying to make it good.
Okay, thank you. Moving right along.
Quite welcome.
Our fifth startup has tailored online insurance for small businesses and the self-employed. From Spain, represented by Rafael González Montejano, the CEO and founder, join me in welcoming Singular Cover.
Hi, I'm Rafael González, CEO and co-founder of Singular Cover. We are a fully digital insurtech specialized exclusively on the insurance needs of SMEs and the self-employed. And we do specialize on SMEs because it's quite clear one of the most underserved segments in most developed economies. But ironically, they also represent a sizable part of those markets. And this is most apparent within the insurance industry. Think of it in terms of gross written premiums. Premiums for SMEs and the self-employed in Spain range anywhere between 4 to 8 billion. In Italy, 8 to 10 billion. In Latin America, they can reach upwards of 25 to 30 billion euros. And I think this market is broken mainly due to three reasons. One, there's a lack of a true digital solution due in part to high dependency of carriers on agency distribution, the traditional physical channel. Two, there's a lack of incentives for carriers to dedicate resources in a segment that only represent 10% of their businesses. And three, their lack of incentives for agents and brokers to cater to a segment that requires a high degree of a specialty, especially when it requires a lot of effort compared to a low commission. So put it all together, and in one side, you have a very poorly serviced segment. On the other side, it turns out that this segment is quite large. You put it all together, and now you have a massive opportunity. And how do you maximize this opportunity? So the answer to fill this gap is to digitize and automate the full value chain of a very obsolete and inefficient model that is not suitable for SMEs. If you digitize the distribution side, so SMEs can have direct access to insurance products anywhere, anytime, in a fast, transparent, and easy way. If you digitize the underwriting and pricing side of the model, so they can get the right coverage at the right price. And if you digitize and automate the service and claims side of the business to truly lower your expense ratios, you now have a fully digitized SME solution that gives them a customized, fully digital insurance product at a much lower cost and a much better customer experience. And this is exactly what we're doing at Singular Cover. Just tell us who you are, what you do for a living, or what type of business you have, and under 3 minutes, you will have an active insurance policy fully customized for your business. Cancel anytime, monthly payment, and very competitive prices all the time. And in fact, this is so clear, fast, and easy that in less than 10 months, we have acquired close to 1,600 SMEs on our platform with very promising unit economics that will ensure payback ratios of under a year. And to achieve this, we have a very solid pool of talent from diverse backgrounds and experiences, from insurance, banking, product, digital marketing. This diversity is what makes us strong. So if you're an SME, a startup, or a self-employed, we want to become your leading insurance provider. Give us a chance. Thank you very much.
Right. Moving right along. Time for Q&A. All right. Michael, floor is yours.
Thanks for the presentation. Just a quick question on the model itself. So are you a licensed broker, or are you working with an existing insurance company, and how does that work revenue-wise?
So that's a very interesting question, and it's actually part of a very important one on the model, but it's very technical, but I'll answer. We started as a broker, which means that you do get a commission from companies to distribute your product to SMEs. And it's a very clear model. Yeah? You sell the best product out there. However, as of today, we have a license to be a broker and a license to be what's called an MGA. And an MGA is a hybrid between a broker and an insurance company without the capital requirements. And the reason we want to become an MGA is because we think this is beyond commissions and selling products. Customer experience is key in this sector. SMEs want something that is suitable for the profession, quick, easy to understand, monthly payments if they want to. To do that, you have to become an MGA, and that's what we've done. So under the MGA model, you get the commission, and on top of the commission, you get more commission depending on how much you want to take on the value chain. Does that make sense, Michael? And in fact, we do want to take it all in the value chain. So the margins just continue growing.
Okay, we've got time for two questions. Javier Villamizar.
Yeah, would like to understand your expansion plans again. Sometimes I get worried when people say, I'm going to conquer Europe. And by the way, LATAM sounds like is another country in the union, and is not something like that. So what makes you believe that you have an advantage?
You're right,
and an
Javier.
edge
So
to
two
go there?
things. First about LATAM, and we talk about the team and how diverse we are. I have 20 years of experience in the insurance market, 15 of those in LATAM. I manage, so I know it's a very attractive one. You go to any bar and you want to say, I'll take over LATAM. And then it's a big surprise. It's a complicated market. It requires time and patience. But we believe SMEs and self-employed in the LATAM market is very attractive. But having said that, we have a lot to do in Spain. We have 1,600, we have 3 million SMEs, so we have a long way to go. However, part of our model calls for strong relationships with insurance companies. So we're competitors sometimes, some others we collaborate together. We have strategic partnerships with reinsurance companies and insurance companies so we can use their physical infrastructure in Latin America. So the plan, and we're very advanced actually, called for an MVP in Brazil and Colombia. Small MVP, just test the model, get the machine running, and then we'll take over LATAM, as you said. But very humble, slowly, we know these markets have particular uniquenesses. But we do like LATAM, Javier.
Unfortunately, we're running a little bit bad on time here, so we got time for one more question. Eva.
Hi, my question is, precisely as you were mentioning, you're working with quite a few insurance companies. Some of them I've seen they're pretty large. I can imagine that from a sales and product packaging perspective, you can get to a better experience. But I'm wondering what happens with the claim processes when things go wrong, when consumers actually have to go and claim. How do you ensure that UX is as good as it is when they're applying for
This is really at the core of what we're doing. If you think on claims, I think about 30% of any insured person will have a claim. That's called the frequency ratio, right? And this is a moment of truth. As a broker, you cannot match the claim. You can call the company, you can tell them to expedite the claim, but you cannot influence it. And we believe influencing the whole value chain is key. That's what gives you the MGA model. So what we're doing now as an MGA, We actually were one of the few fortunates that managed to close a round not long ago, and that allows us to expedite the digitization, as we explained before, of the whole value chain, not only distribution, but claims. So we're building a platform for claims, and I think one of the most critical points on claims is what's called first notice of loss. That is, when you actually have a claim, this is the most crucial moment. You feel vulnerable, you don't know what to do. Filing a claim easily and that you know it's being registered and that you know that it's being acted upon is a key moment of truth. That is what we're focusing right now. So we will do the whole value chain. And again, we're a startup, so we will be working with some TPAs and what have you. So,
Thank you.
Okay, thank you. Moving right along. Our next startup, number 6, is leading the next generation of a managed marketplace for alternative investments. From Switzerland, Andreas Besner, CEO and co-founder, is going to present Stapleton Financial AG.
Hi, everybody. Thank you very much for having me and the chance to present our startup Stapleton. My name is Andreas Betzner, and I am the CEO and co-founder of Stapleton, the leading next-generation marketplace for alternative investments. Our vision and mission is to empower prosperity and positive impact from alternative investments. We are revolutionizing and democratizing access to alternatives, and by doing this, we enable financial freedom and financial inclusion, and thus contribute a little bit to make the world a better place. So why alternatives? Because they tend to outperform traditional investments by a large margin. And the most successful and largest investors are allocating heavily to alternatives. But 95% of all investors are excluded from this asset class. These people work hard their whole life, and 1 or 2% in extra returns per annum can make a big difference in fulfilling their dreams and spending more time with their loved ones. But accessing alternatives is very hard. It's full of frictions, and distribution happens mostly offline. It takes time and is non-transparent, with endless calls and physical meetings. And then you're challenged with paperwork and high minimums, ending up with a non-diversified portfolio, which is bad. So now enter Stapleton. Our managed marketplace enables and connects the whole ecosystem. Qualified investors can access hundreds of unique alternative investment opportunities on our marketplace via curated, customized portfolios or individual products, and all of this easily from the existing bank account. Providers, on the other hand, can efficiently generate new leads and assets by listing their product or running campaigns. Stapleton, as a managed marketplace, sources, presents, and makes those opportunities available for our clients. The market is gigantic, with 21 trillion in assets, leading to at least 210 billion in revenues. It's huge, no matter how you slice and dice it. It's so fragmented that the largest provider of alternative investments has just 3% market share, which in turn, together with low transparency, creates extreme frictions for both investors and providers to transact. By the way, also Switzerland commands the world's largest market for private wealth, which until now is mostly excluded from alternatives. We serve banks, family offices, and wealth managers catering to end clients. And we have also tremendous interest from individuals directly. Currently, we've some 40 investor clients that generate some 600,000 trailing 12 months revenues. It's a huge white space of opportunities. Investors, providers, and distributors love us as they can be more efficient and expand their scope through Stapleton. Our team is very experienced. With more than 100 years of experience. Myself, I'm a serial entrepreneur, active startup investor, and I founded a hedge fund firm which I sold. My partner, Konstantin, is an experienced CFO who previously led a private equity-funded growth company. Carmine has built multiple teams and offices for established financial institutions. And Vincent was a crypto COO at a startup. And Alexander was a former head of marketing for a leading alternatives firm. So thank you very much. We are currently raising our seed round and are also looking for corporate partners. And we'd be super excited to win this competition. So thank you very much.
Okay, time for Q&A. All right, what do we got here? Question time. All right, Diego, floor is yours.
Hi. Well, we are a venture capital fund, so I want to understand from the point of view of the fund managers, what are the benefits of being on your platform? It's to generate additional demand, but what else, and how you manage, the typical process of a fund with their LPs.
So we're right now heavily focusing on liquid alternatives, meaning like hedge funds, which are a little bit more liquid, and also in the space of private debt, late stage venture, private equity, but also direct investments in late stage single opportunities. And obviously, the longer the time frames of those funds, especially like venture capital with 10 to 12 years, is, let's say, lesser attractive for, let's say, our target clients like financial intermediaries and wealth managers, but we also do that. So there are many different ways to work together on the provider side. Maybe on the investor side, we source curated portfolios, and ideally by building co-investment portfolios together with VCs. So that would be one opportunity that you have a portfolio which, for example, is in the like next-gen food, health, sustainability or something, and we build co-investment portfolios and invest alongside with you in those deals, and you get a cut of the performance fee to allow us in. But otherwise, we also allow you to just list your product. If it's a bankable product, which most of our partners would seek, we would do a tracker certificate that would be, let's say, a feeder into your fund. That would be a solution, but you can also list your product directly for direct investments. And we, besides the listing, you can also be included in special campaigns that we can launch across social media or platform and email marketing, which could be, not sure exactly what, let's say a fintech portfolio, and then we would kind of offer you or a selection of available products within a special report, or we can help you raise a roadshow across our clients, etc. So there are many ways to work together.
Okay, thank you. Ruben Nieto, you're next.
So thank you for the presentation. It's been very helpful. So my question is regarding, so you are mainly focused now in the B2B2C model. So this is in your investor side, but you also mentioned that you are willing to have access to final investors directly in the product. So how do you have to think about how to manage the situation in which probably you are going to be in some way the competitor of your investor side?
Yeah, I think we're not really in competition with our investor side because we are not targeting the largest funds, the largest banks that run those funds themselves, because they can maybe also have direct access and do that themselves, but more like family offices and like a wealth of wealth managers and smaller banks like private banks. So we're not really competing with them. But what we're actually doing is we're helping them to better serve their clients, because right now they are excluded. They can only either get a selected product scope within the existing bank, and if then it's not customized, and we can allow them to let's say either invest in readily available curated portfolios, but they can also take these portfolios and customize them to their own needs, meaning they can white label them, create their own currency, their own fee structure, etc. They can also what we call bring your own strategy. They can take existing portfolios and add one or two of their existing funds, and we can kind of bundle that as a structured product, for example, and then make that available with low minimums for their clients, so they can then break down the allocation across all clients, no matter if they've got 500,000 or 5 million, the end client, and they can allocate like 3.5% across all of them. And right now it's not possible because the minimum just for one single investment is so high typically.
Okay, moving right along here. Corinne, question please.
So thank you very much, Andrea. So my main question is related to what is the typical profile of this qualified investor that use Stapleton, and more or less what is the average ticket that this investor invests through the platform?
Right. So as I mentioned, we're not targeting the financial intermediaries that have their own capabilities to do hedge fund research, for example, and do direct investment and do their own structures, but more let's say the mid to lower tier of those markets. and though they range from, let's say, one person shops to maybe 50 individual relationship managers, and their investments may range from just a few hundred K to, let's say, 10 million. We're also talking with the largest banks in Switzerland to do, let's say, early stage venture co-investment portfolios, which we kind of source and structure, etc. So it can range really across different spectrums. But what we've seen is the average investor just has, average financial intermediary investor has 1.5 million, and the cohort revenues with one investor, for example, that joined in Q4 2018 or sometime in Q1 or Q2 2019 is now 4 times as much as in the beginning. So as we generate new clients, we are expanding heavily because either they are telling it to other relationship managers, they're investing with more clients, or it's just expanding, and they're actually looking for many more products, not just one product. So once they've got a good experience with us, they're also investing in multiple additional products. So it's a really nice flywheel effect. And the customer lifetime value is pretty high because most of those deals are let's say 1 year or maybe up to even 12 years in lifetime. So it's also very let's say effective, and the customer lifetime value to customer acquisition cost is really attractive.
Okay, thank you. I'm sorry we're running out of time, so we'll have to continue with our last startup for today. And this startup is the first time credit card for young underbanked population. The startup is from Mexico, and Gustavo Rojo is the CEO who's going to be presenting. Join me in welcoming Vexi.
Hi. Only 1 out of 10 Mexicans have access to a credit card. It means banks are leaving over the table more than $3 billion in revenue annually. I'm Gustavo, CEO of Vexi, the first-time credit card for mobile users. We launched just in April, 2 years ago. We already have more than 65,000 approved credit cards and more than $1 million in ARR. What happens is that traditional credit cards aren't designed for the Mexican market because its credit lines aren't aligned for the Mexicans' needs. So millions are being left out. We grant them access to the formal financial system and all the benefits that it involves. We have developed a model that helps us to properly select customers from those millions that are looking for their first credit card. So with this, we are able to target this huge market or untapped market. Given the nature of the product and the segment that we are targeting, we decided at the beginning that we wanted to prioritize validation of unit economics and product market fit over growth. Now, we have achieved to reduce risk and increase customer satisfaction. That's why we have almost 1/3 the delinquency rate of some traditional banks and 2 times better customer satisfaction than the average of the industry. These are encouraging metrics. However, it's important how we achieve it. We strongly believe that in order to be leaders in innovation and disrupt this industry, we need to own our technology. So from day one, we launch innovating features with our technology. The technology is also powerful because it gives us this unfair competitive advantage, 60% saving in fixed cost. This was useful, for example, to achieve or to get to our first month with positive cash flow just last April in the middle of the crisis. Now, we are ready to add more and more services to our platform in order to develop the best digital banking offering for our customers that already trust us. One of the main advantages of Vexi is the team. We have a strong experience managing and building new companies. We are really proud of what we have achieved because while managing properly the risk and innovating in technology, we've been able to open an on-top market, grant them access to a huge community, and generate revenues. Thank you.
Okay, time for our final session of Q&A. Questions? All right, up the top here, Esteban. Mute. Esteban, you're mute. You're mute, Esteban.
Oh, yeah. Can you hear me now?
Yeah,
sorry.
Perfectly.
Thank you, Gustavo, for the presentation. So, right now, given what is going on in the world and given what's going on with COVID, how are you planning to tackle the increase on defaults that we may see in the near future?
Hi, Esteban. Thank you for the question. You know that we have already been working on that. From March, we started designing strategies in order to help our customers to keep current, to help them to overpass this difficult season for all of us, and it's been working. And I think that it's really powerful what we have found in this critical or crisis season. We have found that our customers are continue behaving well, properly, or very good. Just to tell you, just last month, May, was the highest month with payments in the history of Bexi, you know? So it also tells us that we are selecting our customers as we were expecting, and we were trying to select reasonable customers that take care of their financial history and they behave properly. So we are taking these actions, not only for now, but we are observing and measuring, and maybe to add it or continue it through the months to go, so as to be ready, as you say, for what's coming.
Okay. Thank you. Paula.
Yeah, thank you. Thank you so much, Gustavo. So I guess my question is, I think that one of the biggest challenges for this type of business is client acquisition strategy and how you position yourself in terms of marketing. I don't know if you've considered, for instance, going to either challenger banks or neobanks or even microfinancing institutions over there in Latin America that are already launched. And have them use your technology, and since you have built that technology and have the regulatory framework, it would be maybe a B2B acquisition strategy or B2B2C rather than directly going towards B2C, or maybe you've discarded this optionality.
Yeah, thank you, Paula. That's a very interesting question. In the B2C side, we have this huge advantage of cost efficiency that nobody has. So we are pursuing this because it's a huge market. We are doing very well, not only from the side of technology, but also from the side of the value proposition and the product. People are reacting really, really well. They are promoting. It's an active community. You can see it in Facebook and all these places. So we want to pursue that. But also we are working to some strategic partners in order to offer this technology. Currently we are launching a pilot with one of the biggest beverage companies in order to offer a co-branded credit card to their customers. So it could be huge. It's hundreds of thousands of customers, and with the co-brand of them gives the trust and the easiness to get to these customers. So yes, we are pursuing that in that way, like small deals. We want to use this also to test and to be sure that we can provide it and that it will work as we think. But if it works as we think, then we'll be ready to do it for different retailers and fintechs even that have been already looking for us. But yes, we are starting with that and it looks promising.
Thank you.
Gonzalo Perez, please.
Yes, hello. Thanks, Gustavo, for the presentation. I have some questions that I'm going to try to compress in just one. So basically, it's to try to understand a bit better the business model, because from what we know is that we are not offering credit cards to this untapped market that you're saying, because they're not that profitable as some older target. So the point is, how are you digging in? Are you selling the data afterwards? What's the business model itself for making profit of this market?
Yeah, from the years that I was working in banks, I realized that we have some issues like legacy systems and expensive infrastructures. So when I decided to launch Bexi, I focused that we need to overcome that in order to be successful and disrupt the industry. No other way. So this is helping us precisely to be able to, or not to be profitable with these customers. Just to give you an idea, the comparison between the revenue of 12 months compared to the cost of acquisition is 10 times. You know, so we are getting this money from customers. They are paying for it because they value the service that we are providing to them. So with this being said, our business model is a fee, let's say a starting fee or opening fee. Also, we charge the interchange, as some of you may know, is the portion of revenue that we get from any single purchase that our customers do with their credit card. It's around 1.5%, and we get it complete because we don't have third parties. And also we get, for sure, from the financing, from the interest rates. You know, so this is a really, really strong, I mean, compared to many startups, we have this really, really strong business model, and it has helped us to have the results that Avio's shown you, know, like being positive in cash flow and so on.
Okay, thank you very much. Okay, well, that brings to an end our startups. 7 startups. Now the jury is going to deliberate, and then Maria's going to come back a little later to tell us who the 3rd, 2nd, and 1st place winners are. But before we do that, we have a special treat. Today, we're going to have a closing fireside chat with Carlos Torres Vila, who's the Group Executive Chairman at BBVA. We have the honor to count on him, who's been considered a very old friend of South Summit for his many collaborations in the previous editions, and also for his deep understanding of innovation as an essential and inseparable part of the financial services of our era. Join me in welcoming Carlos Torres Vila. Maria.
Hello, Carlos. It's just a great honor having you here. This is the best for Virtual South Summit. You've always been our ecosystem partner, and you are the most innovator. So I think if someone bets for startups, it's you. So thank you really very much. We know we are a little bit late. You've been here listening to the startups. So you are, I think we are very lucky because he's been listening to you, to your pitches and to the questions. So thank you very much. You remember some months ago we were together with Fireside, just in South Summit. So we are really very happy. I don't want to take more time from you. But
okay, Maria, thank you. Thank you very much. I think I have to connect more often.
Thank you very much. I leave you, but I will talk to you later on. Thank you.
All right, Carlos, we're going to start. So first question to get this started. I have to start by asking you about the COVID-19 pandemic. What has been the BBVA response, and how has BBVA kept its operations going in the past few months? What do you think is going to change in the way people and businesses like banks operate in the future?
Well, first, thank you for the question. And first, I would like to thank Maria and the entire crew at South Summit and Ian to have me here. It's a great opportunity again to hear some refreshing pitches from startups. I wish I had more time to dedicate to listen in. But getting to your question, we suffered this great crisis. I would also like to send my best wishes for a speedy recovery to everyone affected by the disease. And of course, my condolences to those who have suffered a loss near to them. We at BBVA have, from the very beginning, focused on protecting health and security of employees, also of our clients, society in general. We came up with a big package of support, 35 million euro across all of our geographies, a lot of equipment purchases. We leveraged our venture capital investments in China. We have an investment through Innovation Ventures that had invested in the B2B supplier of health equipment in China. So we were able to get some ventilators.
Mute. I think your mute is not working, Carlos. No, we still can't hear you.
Can you hear me now?
Yes, sorry. Perfectly.
So this is strange. This happened in our trial earlier, that the mic mutes itself. So sorry for that. I don't know where you lost me, Iris.
You were talking about the 35 million that you've distributed around your geographies.
Right, and the fact that we leveraged some of the connections we had made in China through our venture capital investment arm. We have brought ventilators to Mexico, to Turkey, to Spain, and also have supported with other types of equipment, also with research grants from our foundation to support scientific research related to COVID. So about 20 projects, near 3 million euro of support in biomedicine, in economy, big data, social sciences, etc. So that was one big front. At the very beginning, let's help out with these types of programs. Second, of course, very important to help our clients withstand this very difficult period. So we have provided payment relief. We have provided support to the most vulnerable. For example, we have waived fees. We have paid early pension payments, unemployment benefits, and very important, we have provided and continue to provide financing, especially to the self-employed, to the SMEs, those that are suffering most. And really, as I always say, when I hear talk about reconstruction, even reconstruction committees or reconstruction efforts, the best way to reconstruct is to minimize the amount of destruction. And this is the job that we need to do now. So we have provided all of that, and of course, a big dose of empathy as well, listening, being near our clients, helping those that are going through significant stress, emotional stress. Many people who have built a business, entrepreneurs like yourselves listening in, who have worked hard all their lives, and even their parents or grandparents or beyond, and now they see that their creation is at peril, is at risk because of what's going on. Then internally, we have very well continued the operations. So leveraging technology has been the key lever to maintain operational continuity, support our clients. More than 90% of our employees have been working remotely. We're now returning gradually. We need to get back to minimize the damage. We need to get back to work. Not just BBVA, I mean the society in general. But we are following a data-based approach to the return. So based on traffic, we reopen branches, for example. We're also implementing, actually it's already working, contact tracing app, and so on. And we have seen a big take-up in the use of digital channels. So for example, in Spain, digital transactions have grown by 32% in just a couple of months. Same with the visits to the My Conversations page in the app. So that sort of the virtual chat with the remote manager by 35%. Mobile transactions have more than doubled in Mexico versus last year, and I could go on and on. Our digital sales are well over 50%. We have seen how clients who typically would not use the digital channels are jumping into them and seeing how easy it is, etc.
Well, Carlos, we've seen, we have a very large audience of entrepreneurs and fintechs here today. It would be interesting to understand from your perspective how large companies like BBVA embed disruption in their businesses.
Well, it's a great question, and it's not easy. I was listening in earlier to Vexi presentation, how the big banks have this legacy. It's absolutely true. And as I like to say, when the rate of change outside is larger than the rate of change inside, the end is near. This is a quote that I read some time ago. I think it's from Jack Welch, and I believe it's true. So we need to, as you said, it embedded into everything we do. So we are stressing how important it is that we are disruptive as one of our values. We have, the way we did it at BBVA is we have focused on three key ideas to drive our behavior, and each one of those three has themselves another three. So it's 9 things. So the first is our clients first. Second is we think big. Third is we're one team. So thinking big, just to expand on those, thinking big for us is not only to be ambitious, but it's actually to break the mold. So it's the disruptive element we have it within our value system. So the status quo is not good enough. And the last one is to surprise the clients, sort of this wow factor. Culturally, trying to reward and foster disruption, not status quo, but change for the sake of change itself. We cannot continue on doing things the way we have always done them, but we need to drive that entrepreneurship within everyone. No? Entrepreneurship is really the engine that creates the future.
Okay, Carlos, I know you're busy, so we're going to have one final question. You may remember that Maria chose as the topic for the South Summit this year sustainability. And that's become a topic that everybody is now talking about. And probably we've all been thinking about that while we were in lockdown for a couple of months. As far as I know, BBVA underpins sustainability, both in terms of reducing climate change and in supporting communities and businesses where it operates. Do you think that the COVID-19 crisis is going to reinforce the transitioning towards a more sustainable and inclusive economic recovery?
For sure. Every crisis is an opportunity, and this one is an opportunity to drive with additional force the agenda, the sustainability agenda. At BBVA, we have a clear purpose to bring the age of opportunity to everyone. So we believe we're in an age of opportunity, and we want to bring it to everyone. That then breaks down into two big ideas. One is around driving financial health, so ensuring our clients have a good management of their finances. The other has to do with them being sustainable. So we can help them be sustainable and thereby contributing to a sustainable society. Not just climate change, but in general, environmental sustainability. And then in addition to that, social sustainability as well. Why do I think that COVID is an opportunity? I think, well, first we have seen that under the most difficult circumstances, the crisis has brought the best in people. Not just people, but companies as well, and society in general. We have also learned that we cannot take things for granted. So the only way forward, if we want to have a rapid recovery, is to work on a more sustainable, more inclusive development model. And at BBVA, our approach has been quite comprehensive. We have a public pledge since a couple of years ago, which for 2025 will have mobilized 100 billion in sustainable finance. We have well exceeded our targets in the first couple of years. We're beyond the 30 billion mark in the first 2 years of the pledge. We have also launched several initiatives to help our clients transition to a low carbon economy, and we will be launching more. For example, we have a commitment to have in Spain this very year, 2020, every one of our products a sustainable alternative. We have just launched, for example, in Spain, we were the first bank in the world to use data analytics to calculate the company's carbon footprint. So this one view functionality we have in our banking app for companies. We turn the energy expense into tons of CO2 emitted, helping clients, companies be more sustainable, etc. And in this realm, we're very open to cooperate with the fintech ecosystem. We believe that technology and data are the key ingredients, together with people, of course, all of you, the entrepreneurs who create the ideas, to drive this sustainability agenda. So I'm looking forward to further cooperation.
Okay, Carlos, thank you so much. It's really been an honor to have you with us. So I'm going to throw the microphone back at Maria, who's going to take
Before
us
we break, if I can, I forgot to say something that I typically end with when I talk about sustainability, Paris. So when we talk about the future of finance, which I am asked about quite a bit, what's the future of finance? I always say the future of finance is to finance the future. Yeah. So a future with a capital F, a sustainable future. I'll leave it there. Sorry.
Very well put.
No, Carlos, that's a very good end. So I think that the finance of the future and the sustainability is great just to end. And I can assure that when you say one of your goals is the disruption, I can assure it is like that. So, and I want to congratulate about everything that you've done with BBVA about this terrible crisis that, thank God, we are going out and we are finishing it. So thank you very much. But I would love if we could take a photo, because is this a great moment just for a photo for all of us? So Paris, I think that you can do it with Carlos and with all our jury and our startups, and we can say to you, thank you very much and goodbye. But first, the photo.
Okay, we're going to get one selfie with everybody. You want to come in a little bit?
Yeah.
On this side, right?
This side?
Yeah, there we go. Okay.
All right, thank you very much.
All right, can we?
Thank you, Carlos. Thank you very much. I think it's the best end for the Virtual South Summit, closing by you. Thank you very, very much.
Thank you.
See you very soon.
Same.
Thank you. Okay, so now comes probably the most important moment of this whole competition this afternoon, where Maria Benjumea is going to announce the winners. She's going to announce the third place winner first, second place winner, and then the first place winner for today's FinTech competition. Maria, are you ready?
This is the most exciting moment. Are all of you are ready? Because I'm going to start with the third one. The third one is CoinScrap.
CoinScrap. Okay, let's hear it for CoinScrap. Where are you?
When we want a big applause
Big
for
applause
CoinScrap.
for CoinScrap.
I want a real one, so we can all applause to CoinScrap. And the second one is Bexy.
Vexy from Mexico.
Hello, Bexy, and congrats. Great applause for Bexy. And now we are going to announce the super winner. And the super winner is Singular Cover. So congrats, where are you?
Singular Cover, there you are.
Cover, congratulations.
Okay, can we have a few words from the winner, please?
Well, thank you so much. No, when yesterday I saw all the startups participating, I thought, oh my God, what have I gotten myself into? So really, thank you everybody, and good luck to all the startups and my colleagues. And I'm sure it's been a close call. Thank you, everybody.
Thank you to you, Rafael. Thank you very much, and congrats. All of you, really. The 7 of you have been absolutely great. So congratulations to all of you.
Okay, but before we wrap up, we need a special hand for the team at South Summit. Chloe and her team have done an amazing job. 6 South Summit, virtual South Summits over the last 6 weeks. And we've had a few glitches, but usually with connections from some of our speakers, because everything else has run like clockwork. Let's give a big hand to Chloe and her team.
Yeah, a big hand to Chloe. But I want another big hand, because I think that there is no better MC, there's no better MC than our Paris de Letras. Is absolutely great. I think that from here, he's going to be to TV, to Hollywood, to everywhere, because I think that he's really amused. And all of you, the jury we've had during all of these weeks has been absolutely, all of you have been absolutely great.
Okay, with that, I think we're going to wrap up for our audience.
Yeah, no. We are going to, first, I think that we could share some things that really has been interesting. And I think that we could share our learnings.
Yes.
Because our learnings has been great. I think that we started really convinced that we had to do something different, something really very innovative, something global, because the innovation is about the whole world, and we are absolutely convinced that we can do things together and identify opportunities. It doesn't care if it's in person or it's virtually. And I think we've learned a lot, haven't we, Caris?
Yeah, we've learned a lot. I mean, if we start to look at some of the things that have been surprising over the last 6 weeks, and that's the ability to pitch online.
Yeah.
That's probably one. I mean, the jury members we've talked to, they've told us that the pitches have been amazing, and the Q&A sessions. So pitching it online is a new reality, and we have to be able to excel at that.
Yeah, I think that has been absolutely incredible. I think the conversation in between the startups after the pitches and the jury, the corporations and the investors, I think has been absolutely top level. And I think sometimes we think that the crises are terrible, but how many things we learned about them and how many opportunities we identify. No, I think we have to be very happy.
And you made the point earlier that online is a borderless world.
Yeah.
And the same thing has applied here. We've been able to bring startups from all over the world, jury members from all over the world, that in a normal situation, the logistics would have just been overwhelming for many events like this.
But here we were all together. And I think that's really incredible. So I want to thank everyone, not only the teams, not only our partner in crime, like is I University. Here we are in this incredible war room since the very beginning. But I think that we have to thank, as we did before, but the jury, all the startups, all the community about innovation. And I want to have a very big thank to our kings. They are, as you know, the president of our honorable committee. And we had the great luck to went yesterday to an audience with them. And it was incredible to see how really they depth for innovation and for this country, for this Spain, betting for the digital and technological transformation. And they wanted to know information about all of us, all the entrepreneurial ecosystem with investors, with corporations, and with the startups. So there we want to tell them, the king and the queen, what was going on.
And this happened yesterday, right?
And this happened yesterday.
Wow.
And I want to really, from here, a big thank, not only from South Summit, I think from the whole ecosystem, no? And so I think it's been a great experience.
Yeah, without a doubt. But before we end, I would like to give a big shout out to all those students at both IE University that have been going through this pandemic with the online classes, and all the students anywhere in the world that are now taking classes online. Your intake, your cohorts are going to be truly disruptive. You've entered digital transformation more than anybody else. So take advantage of this. Take advantage of what you've learned during this pandemic. Take advantage of the way you've now entered the digital age and maximize that, because we are going to enter a battle for talent when we come out of this. And you will be able to differentiate yourself.
Of course, with this teacher, it's very easy.
Come on. So
this teacher, these startups, and this jury is absolutely easy.
So with that, you want to give us our last
I think our
statement?
last thank. And with this, we can do the closing. We've been so lucky to have Carlos Torres Vila, President and Chairman from BBVA, but have also here with us Sabadell, and have, Ainhoa from BBVA, and so many big friends from the different corporates and investors. And what I want only to say is thank you very much to everyone and to the ones who have followed us. And this is the closing of this first edition of the Virtual South Summit. But we will keep on doing things, isn't it?
We'll be back.
So we will back.
All right. Thank you, everybody.
But
Thank you.
Thank you. Thank you so much. Bye.
we keep